Hello and welcome to this very special interview. Joining me today is RBI Governor Dr. Raghuram Rajan. Thank you very much, Governor, for talking to us here on India Today.
Of course.
I want to start this interview on a slightly lighter note. You know, you recently talked about Ronald Reagan on a white horse and the unrealistic expectations from the government. Do you sometimes feel it's the same when it comes to you as well? You know, you give the market a rate cut, it tanks. Do you think that the expectations are way too unrealistic even from the RBI, just like perhaps they are from the government?
Well, expectations are what they are. I have continuously tried to make the point that our job is one of creating a framework of confidence in the rupee, in inflation, in macro stability. But we can't lead the charge for growth. We can help through some of our structural reforms, which is why we announced that we would be able to license payment banks or small finance banks by the end of August. But the charge has to be led by the private sector, by the public sector, by the government, as they make investments, as they create growth. Ours is about creating the environment. And we create the best environment we can given the various trade-offs, right? Every group looks at it from their perspective. The industrialists look at it from the perspective of what it costs them to finance. They forget about the fact there's another group, which is a saver, who's trying to see whether he can get more than inflation by putting his money in deposits. We have to balance the two. And people don't understand that this is all a balancing act.
So when you talk about the larger environment, Governor, do you believe that RBI has played its part? You've met with a fair amount of success in terms of inflation. You've done a lot for the rupee from the time you came. Of course, we've seen some slide, and I'll come to that in just a bit. But by and large, you've been able to create a stable rupee. Do you believe that the rest of the environment now needs to pick up and do a lot more? And what would that be? What would you expect the environment to do, whether it's the government, whether it's the private sector? What would you expect them to do?
No. I think that as we deal with some of the legacy problems of the past, which have built up over time, growth will pick up. I think it's in the process of already picking up. But more work needs to be done. I mean, we're not finished. We need to unclog some of the projects that have got stuck. There's a responsibility there for the government, for the promoter, for the banking sector. Lots of people have to play a part there so that we can put these real assets, which are valuable for the country, back on track. A lot more needs to be done there.
Are you disappointed with the pace of growth on these measures that you talked about?
I mean, you can't work more than 24 hours a day. I think there is a lot of work going on. We have to work within a particular system. It's a good system. I mean, it's good that we're democratic. It's good that we're a vibrant democracy. It's good there are checks and balances. But within the system, we have to move forward, and that has a certain pace. The other thing that's important is, as we become a more developed economy, we need to build institutions, and that takes both time as well as realistic expectations. That we can't go. Continue along the seat of the pants policy making that we used to in the past. There has to be a little more sort of direction, substance, framework. So, for example, as we move towards focusing on inflation, we're trying to put out our forecasts. We're trying to say what we're going to do given our forecasts. But there's always this constant debate. You should junk your forecasts and focus on energizing growth because growth is very weak. Yes, growth is very weak, but we also have an inflation mandate that we have to respect, and we're trying to do the best in doing as much as we can for growth given the inflation mandate.
What spooked the markets and a lot of the commentary that has come out in the media today, Dr. Rajan, after your policy yesterday, was about the forecast. The market, as I said, I started by saying it wanted a rate cut, you gave it to them. The forecast didn't look very pleasant, and I think the bottom message that they were trying to take away from what you said was there are going to be no further rate cuts this year. Is that a correct way of reading what you said?
No, I think that's incorrect. And I think what we said precisely was, given what we believe is our best estimate of the future, we are just going to be able to meet our inflation goals by the end of the year. But there are lots of uncertainties. We pointed to three big uncertainties. One is the monsoon, its strength, but more important, the administrative reaction to potential weak monsoons. And it can make a world of difference if you have a weak monsoon, if you have the appropriate policy reaction. And so that is something we have to wait and see. I mean, we have included some estimates of what we believe a reasonable estimate. But if action is very vigorous, or if the monsoon is much stronger than currently forecast, that will obviously create more policy room for us to act. And similarly, oil prices are a big factor. They've come up quite sharply. We do think there's an upper bound on those oil prices. If they go back down because there is a sense that there is excess supply in the market, which was the first reason it went down, it would potentially give us more policy room. And similarly with the external environment. So what we said was, given our best estimate, there are these risks. We've moved a little, forward by saying that we're going to cut rates despite these risks. But let me outline these risks to you and say, based on how these risks evolve, we will take a view. So it wasn't shutting the door.
So to say that it's a shut door is not correct.
It's not a shut door, it's a contingent statement.
I want to talk a little about oil with you, and the reason I'm getting into a specific commodity is only because of its implications. And we've seen that it was largely the sharp fall in oil which has fixed a lot of our macroeconomic problems. What is your outlook? What do you think is really going on out there? How severe is the risk of any kind of a bounce back?
Well, so there's the fundamentals of the oil market, which basically say that shale production has increased substantially, that shale investment can be done at fairly short notice. The shale drilling areas that have been shut down can be brought back on track quite quickly if the oil price exceeds $70 a barrel or so. That's the sense I get from market participants, which means there is a sort of ceiling on oil of about 70, and that's sort of been what we've taken into our estimates. Now, there is no flow. So if there is more oil and the global economy continues weak, this could weigh on oil prices. OPEC's decision this week will be a big factor, and you could see movement downwards also. The unknown is geopolitical risk. What happens if there are developments in Iraq because of ISIS, developments in Libya? These are places that have difficulties today, and if there is a substantial was there. So there are some unknowns here, and I think over summer some of these developments will play out. The summer driving season also pushes up demand. We'll see if it's not that big, and if supply comes in, that could affect oil prices down the line.
But oil worries you?
Oil is a worry because our country is so dependent on it, both from the current account side but also from the fiscal deficit side.
Coming back to the interest rate piece, Governor, you've in fact even in the past highlighted this whole transmission issue. There's only that much the RBI can do. You've gone and cut rates, but it's about whether those rate cuts are actually transmitting to the consumers. They don't seem to feel that.
Well, they have been
have things changed on that
they
front
are
since
being
the last
slowly transmitted, and when we look at the time series, we are seeing interest rates coming down. The banks are starting to play a part. Yesterday, SBI cut interest rates further, but over time, transmission will increase as competition from the markets increases. Today, commercial paper markets react very quickly to interest rate changes, and corporations can go and raise money there. And because they can raise money there, that's competition for the banks. and banks will have to cut rates to stay abreast of that. What we are trying to do is examine whether our policies in some way are constraining banks' ability to do this, including the base rate policy. My hope is that we move towards a more market-based benchmark over time. So first move towards marginal cost pricing, then market rate benchmark, and eventually get out of the business of telling the banks how to determine their rates. Let them determine their rates based on competition.
And what's the kind of roadmap are you looking for this?
I'd say
this is a big reform.
I'd say by about January, maybe by the end of the though it's a contingent statement.
I want to talk a little about oil with you and the reason I'm getting into a specific commodity is only because of its implications. And we've seen that it was largely the sharp fall in oil which has fixed a lot of our macroeconomic. What is your outlook? What do you think is really going on out there? How severe is the risk of any kind of a bounce back?
Well, so there's the fundamentals of the oil market, which basically say that shale production has increased substantially, that shale investment can be done at fairly short notice. The shale drilling areas that have been shut down can be brought back on track quite quickly if the oil price exceeds $70 a barrel or so. That's the sense I get from market participants, which means there is a sort of ceiling on oil of about 70, and that's sort of been what we've taken into our estimates. Now, there is no flow. So if there is more oil and the global economy continues weak, this could weigh on oil prices. OPEC's decision this week will be a big factor, and you could see movement downwards also. The unknown is geopolitical risk. What happens if there are developments in Iraq because of ISIS, developments in Libya? These are places that have difficulties today, and if there is a substantial change in production from those areas, that could breach that $70 barrel upper limit that I said was there. So there are some unknowns here, and I think over summer some of these developments will play out. The summer driving season also pushes up demand. We'll see if it's not that big, and if supply comes in, that could affect oil prices down the line.
But oil worries you?
Oil is a worry because our country is so dependent on it, both from the current account side but also from the fiscal deficit side.
Coming back to the interest rate piece, Governor, you've in fact highlighted this whole transmission issue. There's only that much the RBI can do. You've gone and cut rates, but it's about whether those rate cuts are actually transmitting to the consumers. They don't seem to feel that.
Well, they have been
have things changed on that
they
front?
They are being slowly transmitted, and when we look at the time series, we are seeing interest rates coming down. The banks are starting to play a part. Yesterday, SBI cut interest rates further. But over time, transmission will increase as competition from the markets increases. Today, commercial paper markets react very quickly to interest rate changes, and corporations can go and raise money there. And because they can raise money there, that's competition for the banks. And banks will have to cut rates to stay abreast of that. What we are trying to do is examine whether our policies in some way are constraining banks' ability to do this, including the base rate policy. My hope is that we move towards a more market-based benchmark over time. So first move towards marginal cost pricing, then market rate benchmark, and eventually get out of the business, telling the banks how to determine their rates. Let them determine their rates based on competition.
And what's the kind of roadmap are you looking for this?
I'd say
this is a big reform.
I'd say by about January, maybe by the end of the fiscal year, we should get most banks into marginal cost pricing. We're talking to them about it right now and figuring out what their sensitivities are. And then beyond that, once the benchmark is established, a benchmark company is being set up. Once the benchmark is well established, they shift from that to the benchmark. And they may have fixed rate deposits. They manage the mismatch between fixed deposits and floating rate loans through interest rate derivatives.
Governor Rajan, it's been almost 2 years here, and before that you were the Chief Economic Advisor. It's been about 3 years of your stint in public policy making. And I want to now move beyond the policy and ask you a few questions about India. What do you think India needs to do? What is your vision statement in terms of what does this country need to do to now get back into the kind of position that it probably deserves in the global economic order?
I think short run we're doing what we need to do, fixing, as I said, legacy problems which were coming in the way of stronger growth. Now, these legacy problems come from development itself, right? I mean, think of the whole debate about land acquisition. It's because a lot of land has to be acquired in remote areas where a lot of the population is tribal, doesn't have a strong sort of ability to defend some of its rights. That we've had this back and forth between giving them rights, forest rights, tribal rights, and then finding that we need to manage also to set up mines while respecting those rights. How do we do it properly? It's churn in a democratic society. So we're trying to deal with some of those problems. Longer run, I think we have to institutionalize in a reasonable way how we deal with these problems and make the institutions function effectively. So it's not okay to just set up a dysfunctional institution. So this implies institutions, whether it's environmental protection, whether it's the judiciary, whether it's the regulator, who adapts to the fact that we are becoming a more developed economy and we have the right institutions for that kind of structure.
How does, according to you, India industrialize? You talked about the whole land acquisition piece. That's still an open question. You've talked about make for India versus make in India. These are all fine in terms of talking about these. You can choose whichever word, but fundamentally, how does India industrialize?
Okay,
what do we need to do to create jobs, to get manufacturing back in place? What is your
I think our greatest strength is the fact that we have entrepreneurs of a variety of kinds, young, old, tech savvy, non-tech savvy, whole variety. Okay. We have to create an enabling environment for them, which means infrastructure, which means we need to upgrade the quality of human capital. Today everybody is in schools, but they have to learn more. They have to come out of high school knowing a sufficient amount to be able to be employed in a good factory. So employability has to be improved, skill building has to increase. We need to work on business regulation, and we need to hack away at the multitudes of wrong regulation while creating appropriate structures where we regulate very poorly today. The fact that sewage flows into the Ganga, how is that possible given all our regulations? We need to regulate better with a cleverer, lighter regulation. We need to work on that. And the last aspect is finance, which we are sort of focused on. How do we make finance more available to the entire country so that it can use it to grow? And there are issues like a more vibrant banking sector, cleaning up the legacy problems in the banking sector, improving governance in the public sector banks, Those are issues that engage us. Resolution, how to fix guys who are in distress, how to make sure that, as a former minister said, we have no sick entrepreneurs, we only have sick companies. Those are issues we need to deal with.
Do you believe that SARFAESI clearly hasn't worked as the alternative to creating a robust bankruptcy mechanism? Do you believe that that is something that should be taken up by the government? Because you've talked in the past about crony capitalism, you've talked about this whole thing of nobody in this country ever goes bankrupt. We'll go put a notice of recovery on a small poor farmer, but we aren't able to recover a rupee from.
SARFAESI and other associated laws are quite, are functioning with respect to the small guy. Sometimes some people would allege perhaps a little too harsh. The problem is that they get stalled when it comes to the big guy. And therefore, what we need to do is have a decent bankruptcy system which operates in finite time and acts as a shadow, so that if you don't pay your bills, there is recourse for the lender through a bankruptcy system. In most countries, if you can't pay your bills, debt essentially becomes the owner. Sure. In this country, if you can't pay your bills, it becomes the starting point for negotiation with your creditors, rather than your creditors owning the firm. Equity has a very strong right in this country. And the question we have to ask is, with the multitude of entrepreneurs we have going forward, is that an appropriate starting point? And that's where the bankruptcy code, which the Ministry of Finance is thinking of bringing into place, will become important.
At your recent 80th year anniversary, the Prime Minister said you're a very good teacher. You meet him once in a while, you show him just a few slides. So if I were to ask you in 3 quick points, what according to you would be your suggestion to the government to fix these 3 problems so that things can move? What would those be?
No, I think the government knows what the issues are. It's working on them. I think the stalled projects would be important. The distribution companies, the power distribution companies today are acting as a we have for the first time producing plenty of power, but it's not going to the consumer because power distribution companies cannot pay for it. So we had a restructuring of some power distribution companies. We need to examine whether that's functioning as well as it should, and for the ones that didn't get restructured, what we need to do. So that's, I think, an important additional issue. And as I said yesterday, the issue of cleaning up bank balance sheets, quite important to reposition the banks for growth as demands for credit pick up.
And finally, Governor, a quick point on the global piece. I remember back in January 2014, you had told me in an interview about what you thought that the Fed should be doing, and some of the things they were trying to do would have serious global repercussions. Today, when again the talk of a potential interest rate hike out of the US is again looming, this has huge implications on outflows. We've seen just about $2 odd billion going out because of the entire MAT issue, and we've seen such extreme volatility back here in our markets. How are you reading the global situation? Greece, Fed, if you could just give us a sense.
Well, Greece, I think nobody knows. It's a dialogue which is a difficult one. I mean, I think one can sympathize with both sides on that. So I hope it works out in a way that doesn't disrupt the European financial system. But I don't think anybody really knows whether they will come to an agreement. The government there is constrained by what is promised voters, and of course the the euro area is constrained by their own voters and how much they will tolerate in terms of relaxations. I think as far as the US goes, once again it has had a bad first quarter. Once again the calls are for postponing monetary tightening, and clearly we are in a world where monetary easing by all countries is depreciating the exchange rate, And vice versa. When a country starts tightening or starts reducing the excessively easy policies, its exchange rate appreciates. And I have been talking about this in World Fora, saying, look, we are in a really bad situation where this competitive easing is creating an equilibrium and nobody can come out of it. Because as soon as they come out of it, they appreciate and they lose trade market share. We need to work out how we get out of this. I hope the US bites the bullet and comes out. That will give the opportunity for the others to come out over time.
Do you fear capital outflows out of India?
I don't worry so much about capital outflows. And actually,
our stock markets are pretty much just driven by them, isn't it?
Yes and no. I think when we look at the FII flows into equity, they've been more stable than FII flows into debt. You know, I think that unless there's a deep change in fundamentals, people will make appropriate decisions after an initial bout of volatility. So I'm not too worried that the US decision will collapse our markets. Our markets will react like every other market, but I don't think that after the initial bout of soul searching, investors will stay away. They'll come back if we can create the fundamentals. That's why my point again and again has been, let's create the fundamentals for sustainable growth. In this, the primary aim is to create structural reforms which incentivize our people to and grow. The fake way to do this is to assume away the problems and pretend the world is glorious. Let's tackle our problems head on. And if we do that, I have no doubt that we can reach double-digit growth and above.
From being a financial prophet to being RBI governor, how has the journey been? Are you happy? Are you satisfied? I know that some of your school friends were telling me that public policy is something that was very dear to you even when you were a little kid. When your teacher asked you to get up and say, what is your ambition? Most would say engineer, doctor, but you would say, I want to be the Prime Minister of India. Has it been a satisfying journey for you?
No, I think my ambitions have become more realistic after school. If that was, I don't remember that, but if that was indeed what I said, I think there's immense satisfaction in a job like this, because at the end of the day, you can think back and say, what did I do today? And you can tick off a few things that you actually made a difference. As a professor, even as IMF chief economist, you're basically an advisor. And people can ignore what you say, and typically they do. But here, at least, for some reason, people actually do what you say. And with my colleagues at the Reserve Bank, and we have a very good group here, I think we've managed to make a difference. And it is part of this process of institution building. And that's what I said. Sometimes the public, going back to your first question, public gets upset that you don't give them the goodies they want at the moment. Sensible people amongst them realize that you have to work in order to do what is feasible and not overpromise. Our problem always has been overpromising, overtaking things when we should follow a more measured approach. And I think we're trying to do that. I think broadly across central banks, I think the mistake central banks have made is overpromising what they can do, taking too much of a burden on themselves. Central bank can only do so much. It can create the framework, can't create the growth itself. That has to come from elsewhere. And I think that's what we're trying to tell the public.
It's been a pleasure talking to you, Governor
Thank
Rajan.
you.
Thank you very much for talking to India Today.